Let's talk about the market economics and some of what's going on in venture capital. 40-year high inflation. I think right now the Federal Reserve is probably the most important institution when it comes to markets, and they've kind of in control. It seems like over the last decade or so, it's just whatever the Fed tells you to do, do. They tell you to go long and they're going to pump asset prices, like do it and shut up. If they say, hey, we're going to tighten, just basically get out of the market or go short and let them do their thing. Is that healthy for markets to have the Federal Reserve basically being the driver of good times and bad times?
If the Federal Reserve did a better job, maybe it'd be okay. But I think they've done a horrible job in recent years. And so first of all, you had I mean, does anyone at this point doubt that the reaction to COVID was more damaging to the country than COVID itself, both economically and also in terms of the restrictions that were imposed? I think there's abundant evidence now, for example, like we talked about on the lockdown front, that they just didn't work. They didn't stop the virus. They didn't do anything except plunge us into a very deep recession. And then what did the government do in reaction to that? They printed $10 trillion. And so they flooded the zone with money over the past few years. And then that eventually led to an inflation spike last summer. The Fed, in reaction to that, I remember the 5.1% inflation print last summer. Everyone was stunned by it because we've gone for years and years with very low inflation, and the talk was always about whether we were in a deflationary spiral and that kind of stuff. But the Fed said that it was transitory. They didn't react to it. Instead, they kept interest rates low and they kept QE going. QE didn't stop till the end of Q1. We were still, the Fed was intervening in capital markets to buy bonds to artificially keep the price down. As soon as we got that 5.1% print, they should have stopped the QE right away. Maybe take a little bit of time to assess whether you're going to raise rates. But the QE, why would you do that? You know, we clearly didn't need QE at that point.
I think it got to the point, if I remember the data correctly, at one point the Federal Reserve, via all of these actions, owned like 1 in 4 residential mortgages in America. I mean, just like crazy stats, right? And if that's not the exact stat, it's directionally just such a ridiculous thing that you had a persistent buyer in the market and they weren't going to stop until, you know, eventually we got over 8%. And then it was like, well, maybe we should stop now.
Right, exactly. So because the Fed waited so long to react to inflation, it got worse. We're now at what, like 8.3% or whatever. It'll come down just by virtue of lapping last year's comps
base effect,
on a year-over-year basis, but it's still going to be there. But they reacted way too slowly. And now the fear, I think, is, you know, Powell just said a couple weeks ago that he doesn't see a risk of recession on the horizon. I'm like, what are you smoking, you know, Powell? I mean,
do they actually believe what they're saying?
I don't know. But, you know, from where I'm sitting in Silicon Valley, we're already in a recession, you know, and people are starting to act like that. And so I think we're headed for now for, you know, a pretty serious recession by virtue of the fact that, again, the Fed left the punchbowl out way too long and then yanked it back so violently that it's causing the real economy now to convulse and contract.